So we've got, what, 25 points on the Nifty, 10,889. But as I've been saying, watch out for the mid and the small cap part of the market, because that is where all of the action really is. Remember, China, as we've been highlighting since the morning, has kicked off its major annual parliamentary meeting, the National People's Congress, today. And speaking at the annual meet, the Prime Minister set the GDP growth target at between 6 and 6.5% for the year 2019. This seems to be a bit of a cut. I mean, the target has been lowered a little bit. There has also been a fair bit of other announcements which have been made, like increasing the fiscal deficit. I mean, so, spend more to revive growth, and a slew of other measures, tax cuts, for example. We've got Sean Reen, Managing Director of China Market Research Group, joining us to take us through how we should read this. Sean, thank you very much for your time. What's the most important thing to focus on from what has come out so far from the NPC?
Well, I think from the MPC, there are two things that I want listeners to focus on. The first is that the economy, they set a much lower growth rate of 6 to 6.5% than in previous years. And that's because the economy is quite weak. The last time I was on the show a few months ago, I said that analysts were underestimating the amount of problems facing China's economy. There's a very weak labor market. Companies are just not hiring people. There's very little liquidity in the marketplace. Companies just can't get credit. So there's just this downward pressure on the economy. That's still serious, though what we've seen in the last 2-3 weeks are some green shoots. So we're not seeing a fall off the cliff of the economy like some analysts have talked about, but it's definitely a weak one. The second thing that's important is that the government spending on the military actually dropped. So growth is at about 7.6%, but that's down a little bit above 0.5% on growth from last year. So China's not rearming and militarizing as a lot of Americans especially were concerned about.
Sean, what is your expectation from the Chinese government in terms of, say, impetus to boost the economy?
Well, I don't expect there to be a major stimulus like QE2 like we saw in 2008, because although the economy is bad, it's not that bad. So we're going to be seeing a lot more targeted measures, which they rolled out. The announcement at MPC was that they were going to reduce much higher than people originally thought the value-added tax. So they're trying to be more targeted. Rather than launching a $500 billion stimulus, they're going to try to reduce taxes. They're probably going to try to give more infrastructure spending in things like subways or in airports. But I don't think you're going to see a QE2 again, because although the economy is really bad, it's not that bad.
Sean, I also read that the meeting is expected to review some draft laws with regards to protecting intellectual property rights of foreign entities operating in China. I mean, this is one of the key demands from Washington as part of the trade talks which have been underway. Do you expect a breakthrough here at this NPC?
Yeah, I do think that there's going to be a real push to resolve the U.S.-China trade war. I think right now President Xi is winning the trade war, and Trump needs to end this because he's starting to get a lot of political pressure in the United States. So I expect that there's a likelihood of a deal where China is going to, say, reduce tariffs on autos, open up the financial services market more, like for MasterCard or Visa or American Express, and buy more American agricultural products like soybeans. But I don't think that there's going to be major changes to the end of protectionism. I think China will continue to keep overly protecting its markets, and that's really a bad thing. That's a bad thing for foreign businesses, and frankly, it's a bad thing for China, because there's a lot of inefficiency in the country right now with these bloated, slow-moving state-owned enterprises.
Okay, so Sean, before we let you go, what is your sense in terms of what the impact to global growth could be, and even say something as direct as commodity prices based on the GDP estimate that we're now working with for next year for China, 6 to 6.5%?
Well, I think you're going to have sort of downward pressure on commodity prices generally, but actually I think a lot of market analysts were expecting it to be even worse. So they're probably heartened that China's government is still expecting fairly robust growth. I think my concern for India specifically is in the agricultural sector, because after the trade war started, China started buying more soybeans from India and from Brazil, and I had hoped for more trade between China and India. But if the United States bullies China too much and forces China to go back to old supply chains and agricultural to the U.S., that could have an impact on Indian farmers. So I'm a little concerned about India's agricultural sector in the next 3 to 6 months.
Sean, thank you very much. Appreciate you joining in and speaking with us on the takeaway so far from the Chinese Prime Minister speaking at the NPC. We'll get you more as this one goes on through the course of this week.